Good morning, esteemed guests, and welcome to our webinar, Navigating the Future, Unleashing the Power of Next Generation Core Banking Solutions. I'm delighted to have you join us today as we start our discussion about the dynamic world of banking technology. In the time defined by rapid technological advancements and evolving customer expectations, the banking industry finds itself at a crossroads. Traditional banking models are being challenged by an increasingly digital, interconnected, and fast-paced world. To cope with the changes, financial institutions must not only adapt, but also innovate. And at the heart of this innovation lies the core banking system. Today, we'll explore the transformative potential of next-generation core banking solutions, which offer agility, scalability, and functionality for the financial industry. These platforms boast a wide range of features and benefits that enable financial institutions to thrive in today's digital-first world. From real-time processing and omni-channel support to advanced analytics and AI-driven insights, next-gen core banking solutions offer the flexibility, efficiency, and innovation that banks and other financial institutions need to start adopting to be in line with the demands of the modern world. But before we dive into the exciting world of next-gen core banking solutions, allow me to introduce our esteemed panel of speakers, each bringing a wealth of expertise and insights to our discussion. First, I would like to introduce Dr. Henning, who is a partner at McKinsey & Company in Frankfurt, head of quantum research. Henning is advising and serving banks throughout Europe and the Middle East on their large-scale IT and data transformations, with a strong focus on driving digitalization and innovation, supporting clients on IT strategy, IT architecture, and technology modernization programs, including core banking system transformations. Hello, Henning.
Thank you. Thank you, Marie.
Our second speaker, Ben Goldin, is a digital banking and fintech veteran with over 20 years of experience building innovative technology for banks and financial companies and bringing startups to multi-billion valuations. At present, Ben is the founder and CEO of Clamory, a company providing a holistic digital engagement platform enabling banks globally to implement mobile and web applications. Until recently, Ben was the CTO and strategic advisor of Mambo, a company providing a modern cloud-native composable banking platform. Hello, Ben.
Hi. Thanks for having me.
Yeah. And last, but certainly not least, we have Mucahit, who is the co-founder and CEO of Fimple, a company providing pre-deployable, pre-configured, composable cloud-native core banking platform, as well as fintech and developers ecosystem. Mucahit has got extensive 25-year background in banking IT, fostering innovation within the fintech industry. Prior to starting Fimple, he served as the CEO of a prominent core banking producer affiliated with a leading participation bank in Turkey, where he previously held the position of Chief Information Officer. Hello, Mucahit.
Hello, Maria. Thank you for having me.
Together, our panel of experts will provide invaluable insights, perspectives, and strategies for navigating the evolving landscape of banking technology. I'm truly excited to have them join us today, and I have no doubt that their contributions will enrich our discussion and inspire us all. Well, before we move to our discussion, I would like to inform the audience that our webinar now is being recorded and you'll be able to revisit it after we've done with this broadcast. Let's start with some questions. The first question I would like to ask is to Henning. You have obviously seen many bank transformations and changing core banking platforms. What are the key challenges traditional banking systems face in adapting to the demands of the modern banking?
I think the key challenge that the traditional banking systems essentially see when adapting also to the principles of modern banking is essentially that they have not been built for these principles in the first place. Often these respective technologies have been around for 10, 20 years at least, and have since then also significantly developed. And we should also not fool ourselves. These systems often have been very beneficial also in the past, and will stay also for a foreseeable future, because there is a big wealth of banking and banking products that are out there that are quite well served also by these traditional banking systems in the first place. Where we really see that these systems are failing is if it comes to what are actually the demands of the digital age, because they've often been developed, conceived, designed before the digital age itself. So they are not taking into account first, what do I really need as a customer? They are taking into account, for example, if we take retail banking, what are all the possible products that you could have in the retail banking side, without focusing on what are really the core processes that I want as a customer, and what is the simple kind of process that I want to have in terms of onboarding a new customer, in terms of getting my money transferred. These systems were not designed for that in the first place. The second aspect that we see in terms of real challenges is they're not providing the underlying technology in a way that is there for modern infrastructure. They're not cloud-based from the onset. They are not designed with the latest technologies. So the kind of legacy that one carries along is there. They are reducing this, but it's still there in the first place. And I think the third aspect that I would just add in terms of the key challenges is really the built-in inherent complexity that these platforms are carrying. The amount of products, the amount of processes, the amount of customizations that can be carried within those systems is enormous, because they're covering a lot of what a traditional bank would typically cover. It's typically overwhelming again for the customer, which should be the center if we are essentially thinking about a digital world in the first place.
Okay. Yes, I think these are very, very valuable points. And indeed, historically, nobody expected such a rapid transformation. And many banks exist for so many years, and they have never expected to change their systems, their processes. And now they have to really consider all the modern changes. I absolutely agree with you, Henning. Okay, Ben, what do you understand by progressive modernization of the core banking systems?
Sure. So maybe before I go there, I just want to just add a couple of things on top of what Henning mentioned, right? So
Okay.
One thing we actively promoted at my previous job at Mambo is a composable banking, right? And I just wanted to mention why it is very important in the context of modern banking systems. Traditional systems, for good reasons, were designed as silos, right? So everyone uses word monolith, but that's less important than the fact that they are siloed, basically, right? They were designed as one system that does it all, well, ideally good enough at least, right, for the demands that were there 20, 25 years ago, but in a very siloed way, without ability really to integrate with other systems that potentially do things better, without replacing individual parts of the architecture, with no need to replace the entire system, right? Having a modern integration mechanisms and data streaming mechanisms, and we'll possibly discuss it a little bit later, but these are all super important things to build a modern architecture where every part of that architecture does ideally one job and does it well, and kind of collaborates and cooperates with the rest of the architecture and the ecosystem in the best possible way. So just to add that, and this is a little bit related to the question you asked me about progressive modernization, right? When systems are not designed as silos, when systems are designed basically as a relatively simple and small bits and pieces that are interchangeable, it's also easier to evolve individual parts. So what progressive modernization gives us is ability to change one particular customer journey, one product or one product line at the bank without basically ripping and replacing the entire architecture, right? So we can decide that given current market demands and current market dynamics, we need to be much more agile and much more flexible in lending. But that doesn't mean we need to do anything with our daily banking. It works all right, and we can still stay with our current architecture for a while. Why don't we bring in a new system, a new core banking system, and the rest of the stack just for that particular product line, and harmonize user experience on the top, and just do that transformation one step at a time. So that gives us great agility. We can actually achieve meaningful outcomes in a reasonable period of time, because we all know ripping and replacing core banking infrastructure is typically anywhere from 2 to 5 years project. And according to recent statistics, I think only 18% of all these programs actually succeed, right? So there are there's a lot of risk involved. But when you do progressive transformation and you just look at it one product and one product line at a time, you suddenly both increase the agility, but also decrease the risk, right? Basically making sure your efforts are successful. So these are the things about progressive modernization, Marina.
Okay. Thank you very much, Ben. I absolutely agree with you that splitting up the risk gives much more comfort and confidence for the financial institutions to transform. And indeed, nobody was thinking about that 20, 30, 50 years ago. But now this question, is on the agenda, and it has to be indeed considered. In that respect, Mucahit, coming to the next question, maybe you can also comment on the previous discussion, and also say to us, how do next generation core banking solutions differ from traditional banking systems, and what advantages do they offer?
Thank you very much, Arna. I might add a few words to Ben's perfect explanation to progressive modernization. Actually, it is obvious that doing a transformation of a whole transformation of a bank takes years and years. I mean, and it is a risky operation, as both you highlighted. We position modern core banking systems next to legacy ones, as Ben described, and we do coexistence, integration between a fundamental layer, let's say accounting, account, customer information, etc. And we position modern core banking system as a side core, and customer as a bank, of course, can enjoy doing new banking, new modern way of business, like banking as a service, and simultaneously they do their own legacy transactions, like trade finance, let's say. But coming to your question, needless to say, Marina, core banking systems are very critical systems. They must meet regulatory requirement as well as industry needs. And fundamental requirement of core banking systems are, let's say, information security, regulatory alignment, performance, availability, etc. Both of the requirements are the same for modern and traditional core banking systems. There are many differentiation points, of course, between legacy systems and modern next generation core banking systems. I'm gonna explain in a few items. The first differentiation point should be definitely cloud. Modern core banking systems are mostly cloud-based by native, not cloud adaptive. And on the other hand, legacy systems are on premises mostly. which means huge capex investment for banks, especially small and tiny banks and financial institutions. It is a huge problem statement. The second differentiation point is the microservices technology. The banking industry's adaptation of microservices technology was late compared to other industries. Legacy core banking systems are mostly monolith system or even older. They face some availability, performance, scalability problems. We all experienced those. The third major difference is the integration capabilities, which is Ben already highlighted. If you ask me, Marina, what is the most important factor that bring competitive advantage in this era to a bank, I'm gonna say instantly integration capabilities. In this era, this is platform business days. It is not possible to do everything in the bank itself. I know some banks, they have 2,000 IT employees, more than 2,000 IT employees. They have 2-3 years of backlog. So there are at the same time, there are tons of innovation going on in the fintech industry. Fintech and trusted partners of banks can easily adapt their existing systems or enhance banks' businesses. So integration capability is not fundamental, it is vital for a bank. And lastly, modern core banking systems enable new business models like banking as a service. Again, it is a game changer topic. These modern players, they enable service banking use cases, versatile open banking use cases, or embedded finance use cases. On top of these differentiation, I can say again, capex is dramatically low in the modern core banking systems because of cloud factor, and time to market is also fast. Time to market means, I mean, new product development of bank is fast compared to other traditional banks, because you are using industry's muscles as well.
Okay.
Yeah.
Okay. No, it's indeed very important, everything what you said, the integration capabilities, the cloud agnostic possibilities, the time to market indeed for implementation. These are very, very important factors to consider for all banks when they move to modern core banking systems. In that respect, Henning, I have a question. Which financial institutions actually will have to adapt and implement new generation systems? Are these new banks or old traditional banks, digital-only organizations, or legacy banks? Is it relevant for small microfinance companies or only big existing banks? So what could you say about that, maybe?
So maybe just to say up front, and I think Mucahit and Ben have already referenced to that, the initial perception was very much this is something that sort of people can play around with. Maybe sort of some of the small retail banks will do it, but it's not something that will ever sort of be relevant at the scale and complexity of a large bank in the first place. I think this kind of perception has dramatically changed. And I think primarily, at least from my perspective, due to 3 factors. Number one, and we mentioned that sort of because the perception of the customer has changed in the digital world from I interact with the bank through the branch to I interact with the bank through the app, and I don't interact with the branch any longer in the real sense, which was enforced strongly. And we need to acknowledge that also through COVID-19 and the respective movement also over to the digital channels, when we finally moved over not just small payment transactions and looking at the account, but like also the real business in terms of origination of mortgages, also the whole question of can I do actual business in terms of account opening also fully online. COVID-19 was a real driver in terms of also addressing this, not just for the digital native population, but really scaling this across the population. And then I think this third aspect, and I think Mucahit, you had already referenced that, was this change of the customer perception and also the change of the business model has basically also led the banks to, we need to transform also our underlying legacy technology, because otherwise we run into massive cost challenges and into legacy challenges also in terms of being able to adopt to the latest technologies in the first place. So therefore, we see that the general movements and these solutions are not just relevant for the small banks on the side, but they are also relevant for the larger banks. But they are relevant in a different kind of way than would be the traditional banking system players, because you would not take, and sorry, Ben, sort of for taking your example of Mambu, you would not take like the whole complexity of a massive universal investment bank and try to put this into Mambu. You would basically need to transform also the banking business to make it and to bring it into something that Mambu can then also support. And then step by step, you can put additional business and additional complexity onto the core banking. But it is relevant because it simplifies the processes, it simplifies the customer interaction also for these large banks, for the areas where these modern core banking systems are also relevant, that already developed a competitive edge in the first place. But we need to be clear, this kind of competitive edge is very, very hard to reach if you're sitting on the legacy system in the first place. Second is, this is also relevant in areas that were not sort of in the traditional retail banking core. So by now we see specifically the microfinance players with a lot of clients, small business, but simple business. They are the ones who essentially have adopted also similar kind of core banking solutions and similar banking solutions in the first place. So yes, this is relevant for them. And of course, it is relevant for numerous of the digital-only banks that we're now also seeing that are emerging also within the overall market. I think we still need to see, because also the digitization, if it comes to the asset and wealth management, as well as also the corporate banking side, is a bit lagging towards what we essentially see on retail and digital-only. But we will see the same developments also in those areas. I think it's just the question, the complexity is larger, the business is different, and in certain aspects more difficult and therefore harder to support also on the underlying new digital platforms. But we will see similar developments, I think, also in those areas.
I just want to add very quickly. Just to second a little bit on the legacy aspect, right? So we often when we say legacy, we mean specifically technology, right? But what we do not realize is that a much bigger legacy and much bigger, let's say, drag down is legacy in banking processes themselves, right? Sometimes what happens is bank wants to adopt a new technology. They strike an agreement with a relatively modern core banking vendor, but next day what they do a gap analysis, right? And they spend like 3-6 months, sometimes a year, just documenting all the legacy nuances of their current processes that were designed over 20-30 years to accommodate, let's say, a marginal amount of specific customers, and they retroactively add all this legacy into a new system. So guess what happens? The moment they go live, they have new legacy running on the new technology, right? So it's extremely important to think of legacy not just from a technology perspective, but really standardizing and simplifying processes to accommodate your, let's say, 80% of your customer needs, and then think, okay, what do I do with the rest of 20? You don't necessarily have to ignore them altogether. There are more than one way to address these needs and having a little bit more, let's say, personalized approach and personalized discussion with this smaller number of customers. So yeah, that's an extremely important point, right? Modernization is not only about technology, but much more so about simplifying and standardizing the way things are done.
Yes, absolutely. And in big institutions, in big institution, it is an extremely difficult process. Um, People are not used to changes, or they don't like changes. So it is when it's a business of thousands and thousands of employees, it's extremely difficult to convince the whole team to move on the change, and on the top of the technological complications, the personnel or personal factor plays also an extremely significant role. Right. But the modern world changes very rapidly. We have a lot of new things in the world, in the modern environment. So maybe Ben, you can continue. How do next generation core banking solutions facilitate integration with the emerging technologies such as artificial intelligence, blockchain, Internet of Things, and also like big data? Does this all affect the development of core banking systems?
Yeah,
What can you say about that?
Sure. It's a great question. Of course, I mean, we like to talk about AI, blockchain, IoT, big data. These are kind of the things that are on the top of the mind of many people. Some might be more relevant to core banking, some less relevant. But I think general theme is a little bit similar to what I already mentioned before. Modern core banking systems needs to be designed from day zero to be part of something else, right? Not siloed, not one thing, but really interoperate with other systems. And that is both in terms of exposing capabilities to other systems, but also streaming data in a near real time, right? And I'm talking a little bit in more technical terms, but I think it's important since we are talking about technology, right? So if we want to enable use cases like AI, like integrating in one or the other way with IoT or doing big data, obviously availability and accessibility of the data is extremely important, and modern architectures need to support that properly, right? So as I said, streaming events in near real time becoming very critical if you want to support AI-driven decisioning of certain things, or even, as we probably today would say, a little bit more classical big data, business intelligence use cases or business insights use cases that all requires data, requires integration.
Okay, that's right. Indeed, I agree with you, and we cannot change the developments of the world. In the end of the day, the institutions have to follow the developments, and not the other way around. So that maybe brings me to the next question, which I want to ask Mucahit. What considerations have to be done by banks and other financial institutions when choosing for a core banking system? What can you say about that?
Before coming to your question, Marina, you need to, in terms of core banking systems, especially small and medium banks, tiny financial institutions suffers a lot to manage their core banking system, to operate, because these are costly systems in a traditional way. At the same time, they need to compete with big players. They need to innovate, solve, align to regulation, and these are adding more cost as well. If they have limited budget, in most cases, again, small and medium banks and financial institutions, they lag behind the market. So for this kind of segment, the first thing when they choose core banking system is the time to market requirement. I mean, the core banking system should be super flexible, super lean, process enabled, as Ben mentioned, and should have a strong configuration capabilities, should have some low code abilities, should be lean enough, should be intuitive UIs and processes. So banks and FIs, financial institutions, can create, modify any functionality, product, process without a necessity of a core banking vendor. This is the number one. I think the second item is maybe vendor lacking and invisible cost issues. Maybe vendor lacking is the most painful pain point in our industry. As Ben and Henning mentioned, core banking system transformation, migration is a risky journey. Takes years and years operation, and it's kind of Catholic marriage. I mean, you cannot change it in a day. We see some horror stories around. I mean, customer, let's say, buy X dollars, at the end of 3 years, they pay 5X. So invisible cost and vendor locking issues is super important. The third one is, again, I mean, this is very important, extensibility. Again, this is a platform business era. So core banking system should have integration capabilities, as we all mentioned earlier. Third parties and ecosystem players should contribute to core banking, to bank businesses. I may tell you a few words related to Fimple's position. We propose, for example, core banking, but we expose every single functionality as APIs, and we have marketplace, and we share our SDK with our partners and trusted partners and customers. And there are more than 100 software developers, for example, in our developer studio. These are outside of Fimple employees. Hopefully, it is going to be more than 1,000 next year. So these, with the help of new technology, they do innovation, and they adding new stuff to our marketplace, and also they use by themselves. So it is a kind of open marketplace environment. They develop financial products, and they position in our marketplace. And our community managers validates and checks UI standard security issues like that.
Okay. In fact, talking about companies like Fimple, it's of course not easy to be a newcomer to the marketplace, but on the other hand, the advantage is that you come to at the moment that the technology is developed to a certain level, and definitely with the experienced team, which has got experience for 15, 20, 25 years in this area, you avoid mistakes which other vendors had to come historically to achieve to build when they built their solutions up. So for the new players, at least they know what they have to do immediately to make it right from the start. That's what I see, at least while working in this environment. Okay, we have covered a little bit the complications that the legacy systems or big banks have when they move to new technologies. But Henning, maybe you will specify more what are the actual challenges when legacy systems migrate to the next gen core banking solutions. Let's elaborate a little bit more on that.
And I just would like to say, I think sort of the challenges when migrating to some of the new core banking solutions are sort of oftentimes not so different also from migrating the core banking in itself. And therefore, sort of, it's an important decision and one should not take this lightly. Because the first thing that one has to establish is there a real case for implementing a new core system also in itself? Because the easiest way how to get fired as a CIO or as a CEO of a bank is sort of if one of these core system migrations fail. The other thing is if you have a major security incident. So don't take this as an easy decision, and therefore also the kind of adoption of the solutions that we would have maybe anticipated earlier within the market is a bit slower, simply also because people have realized the importance and the difficulty of such a decision in the first place. So therefore, make sure at the beginning, before you embark on a journey, that number one, you really have an alignment among senior management that this is the route to go. And second, that there are also clear reasons that you can communicate within the organizations why we're going this route. Either because our current core system does not support the business, the growth that we want to have going forward, or because it simply has not is not reliable any longer because we don't get the talent, because the technology is not supported any longer. But establish a clear case also to be communicated within the organization why we are going on this journey, because it's a difficult one in the first place.
Right.
Second, if we then look sort of what are some of the specific challenges that one would also undergo, I think the biggest challenge that we see organizations to go through, and that is often easily underestimated, is the challenge of actually adopting the processes of the legacy organization to a new core system and to a new banking system in the first place. Because without adopting the processes, without really changing the business model, also in order to align with these new systems, you will not get the business benefits. You will not get the new benefits of also having a more extensible core system. You will also not get something that is really like an out-of-the-box solution, because you will customize the system to death to what could and should be something that is a one-to-one replacement of what you have. Do not expect that a one-to-one replacement is possible. A one-to-one replacement will just give you exactly what you currently have and will not get you forward also in terms of the underlying technology. And then, I mean, those two are the two biggest challenges by far, and often underestimated because they lie on the business side. It's not a technological challenge in the first place. It's also a big business challenge that essentially people have to go through. In terms of the underlying technological challenges, this is something that is a bit better understood, because the data, the product migration, this is something that is difficult because the data models of the systems are different, the processes are different, and one needs to get this through. The same is true also for managing the kind of cloud-based environments in the first place. Numerous organizations struggle with sort of setting up a real model that would also support them on a cloud-based platform. They need to go through the respective regulatory challenges of, is this really privacy compliant? Is this DORA compliant? Is this whatever security compliant? So this kind of stuff needs to be managed. And of course, one also needs to manage the respective testing cycles also within the organization. Oftentimes, it's underestimated how much capacity do I need in order to define the requirements from an organizational perspective, how much time I need for actual testing of it, how much time I need from my finance, from my risk teams in order to get these solutions up online. And it's also often underestimated how much infrastructure I need for the actual testing of the solutions, because you don't want to go into production with something that is not well tested before.
Yeah, all right. These are very, very valid points indeed. And a lot of things have to be considered for definitely old existing institutions when they migrate their systems to a new. And the decision for core banking system change is a major decision in the life or operations of existing bank. Indeed. But in the end of the day, banks exist for to serve individual customers, and that's the whole point of their existence. Okay, the whole point is to earn money on that, but they have to serve individual customers. So Ben, what would you say? How do next generation core banking solutions empower banks to personalize services and offerings to individual customers? Maybe you could provide some examples on how progressive modernization of core banking systems has transformed the banking experience for the end customers.
Yeah, sure. I will take this two separately. So on the enablement that modern core banking systems brings in terms of personalization, I'll probably be a little bit boring and mention again the same thing, right? So it's all about integrability. It's all about ability to integrate properly with other systems who are specialized in hyper personalization, specialized in digital experience, like us, for instance, right? It's important that core banking system shares data and shares capabilities and APIs in a way that it can be easily integrated with, and then systems like ours or any other digital experience or personalization systems can come on top and really provide what's cutting edge today in terms of hyper personalization. When it comes to progressive modernization, I have one interesting example that just comes to mind right now. There are probably more than one, but the one I remember right now is during COVID, one bank in LATAM had the challenge of disbursing, providing aid, right, for a population. And it's a relatively large population. It's around 14 million people that they had to disburse allowances to. And their current systems just simply didn't support that. So what they did, they quickly run a so-called speedboat project where they deployed a modern core banking system on the side and the overall modern end-to-end architecture, and they managed to achieve their business goals, build that completely new greenfield product in less than 6 months, and were able really to help a population that were obviously struggling because of COVID, inability to work, inability to earn money. So that's I think it's a really impactful example of how, let's say, progressive modernization and especially modern thinking about how to do transformations, how to run these programs and projects helped achieve meaningful outcomes in a very short period of time that you can actually monetize later on, right? It's not a one-time effort. It's not like, okay, now COVID is sort of over, and what do we do now with that? No, of course you can build around it and on top of it, and you can easily and in a very agile way repurpose these products, add additional products, and kind of build above and around.
Yeah. Okay. Here again, we come back to question of composability of core banking platforms, and that's indeed a very important question. And definitely COVID-19 made a lot of companies and financial institutions move things and change things, at least consider to implement changes. Okay.
Yeah, nothing works better than external pressure. Sorry.
Indeed. That pushed everybody quite seriously. Mucahit, you have covered in the beginning, you mentioned banking as a service system. What could you say about this solution? And do these structures have future, and how can the users gain from them? And do parties involved in banking as a service have to apply new generation core banking systems? Because it's not only banking organizations are involved in these structures. Can you elaborate on that, please?
Yes, it is a tough topic, let's say, but I want to start with Bill Gates' famous words: banking is necessary, banks are not. It is a kind of a political in these days, but referring to this famous sentence, banks are very important players in the economy. I mean, banks keeps economies alive. This is number one. Okay, they were existed 500 years ago, and they will exist 10 years later. Not sure for the future. But there is a huge but here. In order to get banking services, we don't need banks anymore. Huge disruption waiting for banks regarding to BaaS business models. Banks must transform themselves to platform, and banking services will be delivered by banking as a service players and mostly fintechs. We see many regions, whoever has access mass consumer base or supplier network, they want to deliver financial services to their customers directly by themselves, whether getting a banking license or positioning them as a BaaS, banking as a service players. For example, supermarket chains, telco operators, e-commerce platforms. These guys, they don't want to share financial activity profits and values with banks anymore. In order to do that, banking as a service business model is the quickest way. In the BaaS equation, banks are happy also because they acquire customers with a dramatically low cost compared to their traditional existing channels, even for digital channels also. At end user or consumer are also happy because usually they get cheaper or on time or on place services. In a nutshell, BaaS is a perfect mutual benefit scenario for banks, consumers, and BaaS service providers. When I say BaaS service providers, we can think telco operators, supermarket chains, etc. But there's a challenge here for big banks. I mean, I need to highlight this. Since they mostly use traditional core banking systems, they have limited open APIs and integration capabilities. Core banking system must enable diversified product configuration. For example, a telco operator has a loan product with 5 processes. A B supermarket has a loan product with 10 processes, let's say. At the bottom line, core banking system must be so flexible to do that. The very last thing I may say, banking as a service is a definitely game-changing factor. Small banks and greenfield banks have more advantages than giant and incumbents because small banks, they are so flexible, they don't have a backlog, and they can move very fast, and they are eager to do BaaS model, which brings massive consumer and supplier customers.
Okay. I agree with that. On the other hand, here we are talking about major coming of new players who are not regulated, who are not used to the banking activities. Then it all the solutions are digital. It runs a lot via online services, but is that actually secure? And Henning, maybe you could elaborate what are compliance measures taken by regulators to provide security and transparency when digital modern solutions are used and when new players come to the market?
Yeah. So I think first thing to note is no solution is secure if you just deploy it. So this always requires effort and an operating model to be put around the respective solutions in order to secure it. If I just open up my password file to everyone in the world, guess what? The solution will not be secure. But not because the solution was ill-designed, but because I have done human errors. So no one will take away from the respective banks the responsibility of setting up an operating model, setting up vendor relationships, setting up capabilities in order to ensure the security of their respective solutions. Second is, have we seen that like any of the solutions that would be out there would be non-secure by design? Definitely the answer is no, because oftentimes actually these solutions have been designed with all of these principles that are now demanded also by regulators of security by design already in mind when they were constructed in the first place. What we of course see as some of the key challenges also with respect to the compliance of the underlying solutions is number one, we often see that the solutions are of course deployed on cloud. And therefore, the whole question of is cloud a compliant way, specifically if we talk about the European geographies, is a major one. And we should not belittle that conversation. But we have seen also with the latest movements on the data privacy side and others that essentially this question will be overcome, because simply there is no other way also for providing the respective underlying infrastructure in a proper way in the first place. And we all know that the security capabilities of the cloud providers, if it comes to the operational security, is typically even much higher than it would be if you're one of the local banks in the first place. Of course, there are also more attacks, but in general, the security of these solutions is pretty high. Second is also if we look at the respective compliance challenges, of course, sort of DORA and the management of third parties is an important one. And what we currently see is, and this is, however, not confined to the respective next generation banking course, but something that is in general there for the respective technology providers. Of course, we need to set ourselves up in a way in order to ensure that the respective control that is required via DORA also from the bank side is essentially enabled also on the provider side. Third is we've seen that a number of new regulations are coming, be it on the data privacy side, be it the EU AI Act, be it sort of numerous additional regulations. These are affecting the new modern cores as they would affect also the legacy ones. So we don't see a major difference in those in the challenges that we would essentially see in that field. The question is rather how fast you can react. What I would like to mention in addition is what we have seen a lot with the regulators is that, of course, a number also of the digital banks have faced a lot of findings that have been related also to the underlying security of the banking solution. However, what we've seen in most of the cases is that it's a mutual journey as well. Number one, the digital banks need to realize that certain compliance measures simply need to be taken and certain things need to be followed up, and fraud and similar and anti-money laundering in similar cases are a criminal act and cannot be taken lightly. The second thing is that we also have gone through a similar journey essentially on the regulator side. And I remember several discussions also with the regulators in terms of, do we need to set up sandboxes? Do we need to set up certain freeze periods of certain regulatory demands? Because we also need to understand how these modern solutions would also manage several of the things that we would typically do manually, also in the legacy ways of doing things. For example, sending certain compliance certifications via fax is not something that you can easily build into a modern core solution. This simply doesn't exist. And regulators also need to adapt to a certain degree in terms of actually we can find more secure, however, more digital solutions for the kind of requirements that you would see. So I think this is also a mutual journey that we're on in terms of both the providers of these solutions as well as also the regulators that we have to build.
Okay. Yes, I think that the banking operations, whether they're digital, not digital, they still have to be regulated and controlled. So compliance measures are very, very important. And yeah, the banks just simply have to accept that and apply. It's in their interest as well that their customers are satisfied and the privacy of the private information of private individuals and companies is kept secret and secure. In terms of new vendors and new providers of core banking systems, in a way, Ben, you have experience in transforming startups into multi-billion valuation companies. What would you say? Is it still possible for new vendors of core banking platforms to enter the market, and how can they build their reputation and gain trustworthiness of customers?
Yeah, it's a good question, and it's actually a very tricky challenge, right, for new vendors. Every vendor is in a slightly different situation, right? I'm not going to talk about my previous experiences. I think they were quite specific. But generally, for a new vendor to sell to banks, a lot needs to happen. Banks are very reluctant to buy new solutions, right? This is probably also something that needs to change over time, and possibly regulations like DORA and others should help with that, right? Because there is some sort of external attestation of technology. But still, today the common approach is that banks only buy things that are proven, right? If you are not in the magic quadrant, well, in a very simplistic way, it's very hard to sell. What I find working best is to really approach it from some sort of a speedboat or greenfield project, right? Where there's no risk to existing business, and banks can approach it a little bit more with experimentation and take slightly more risk. And once you establish yourself with one or two of such projects, then it becomes much easier. One other thing is also to look for banks that have an urgent problem, right? Like the example I mentioned before with one of the state banks in the Latin America. They simply had no other choice, right? They might be traditionally reluctant to buy new technology, cloud-based technology, things like that. But once they have a very significant external pressure or any sort of other problems, like for instance, like Henning mentioned before, existing solution goes out of support, and you simply will stay with a solution that is not maintained anymore. That's the good moment to come and try and innovate together on a modern solution with a new vendor. At least these are a couple of experiences I had before.
Okay, gentlemen, I'm quite conscious about the time, so we are coming to the end of our discussion. And in that respect, maybe just a couple of words, Mucahit, maybe you will finalize what trends do you foresee in the evolution of the next generation core banking solutions in the next 5 to 10 years? Mucahit, do you hear?
You're on mute, Mucahit.
Yeah. Yes. In the 5 to 10 years period, we are gonna talk mostly core banking platforms, not products itself. There is a huge upcoming disruption to core banking providers, I believe. And banking industry transforming dramatically. It affects core banking systems as well. Banks will be only licensed holders and platforms. BaaS players, as I mentioned earlier, will manage and operate customers. So BaaS players need to add system to operate, configure financial products. So we call it orchestration systems. So we are going to see orchestration systems as well, what I believe. AI is definitely the next big thing. I mean, it's obvious. As the Ben perfectly mentioned, data distribution, etc. I mean, broadcasting. streaming. These are fundamental requirements, not nice to have features. I still want to believe blockchains. I mean, we'll see blockchain, real blockchain use cases integrated to core banking system in a native way, not blockchain-inspired solutions. Lastly, Web3 is the most important topic. We'll see, I believe, successful Web3 use cases like, tokenization, financial tokenization integrated to core banking systems, or shared economy-based financial products, services, etc.
Yeah, okay. Henning, maybe you will add just a couple of words to that.
Sure, happy to. And I think in terms of the trends and the further evolution that we will see, I think we already mentioned that we'll possibly see the further adoption also of the next gen technologies, also for the bigger banks and also in the segments of the banking business that have not seen the massive digitization that retail banking has gone through so far. I think that's also a good development. We will also see that the traditional core system, the traditional core systems will also evolve into that direction, and so it will evolve also their underlying core systems and the underlying technology, so that they will also enable the use cases that Mucahit, you had also mentioned. And I think the final trend that I would hope for, but I think that is the most difficult one, is that we should also see the corresponding change on the banking business and the respective leads of the banking business also in itself. Because far too many times I still see that these discussions are taken as technology-only discussions. And I think what we had also brought across here is it's in essence a core business discussion. And yes, technology can enable that, but it has to be a business discussion in the first place.
Right. Okay. And then maybe just a couple of words.
Just a couple of words. Yeah, so we spoke a lot about AI and machine learning already, and I just had one thought in mind. So today, core banking systems are mostly billing and accounting systems, right? It's a processing engine. I think going forward, especially with advancements of AI and machine learning technologies, core banking systems need to become much more intelligent, but within the scope of their own responsibility. What does it mean? There's a lot of opportunity to be an advisor to bankers, to actual bankers and bank employees in different regards. Anything from detecting and preventing criminal activities like fraud, and both internal, by the way, and external, money laundering, things like that, right? Looking at the loan portfolio, analyzing risks, things like Basel III or Basel IV, Basel V, whatever will come next, can be easily augmented with AI and machine learning. So these things are really embedded into core banking systems themselves, and all this, let's say, compliance requirements around capital requirements and things like that can be derived from the data that is in core banking systems. Even as far as embedding automated regulation itself, right? So for regulators to be able to assess the compliance of a bank in an automated way, instead of providing reports that are then manually analyzed and systematic risks are identified really post factum. So I think that's where there's a lot of opportunity still, right, to make core banking systems much more intelligent rather than just a processing engine.
Yes. Okay. Gentlemen, we are out of time, and I would really like to thank you all for participating and for being with us today and sharing your valuable experiences. To our viewers, thank you very much for attending, and we hope to see you all on our next webinar, which will be in a month or something like that time. Thank you very much, everybody. Bye-bye.
Thanks, Maria.
Thank you.
Thanks, everyone.